Hello everyone, welcome back to the Uranium Fundamentals, where we go over supply, demand, and all the fundamentals to make sure you're holding your investment, or if you're interested in this space, potentially any entry points. Does the sector look good? Is it good value? Where are we looking it's going to head? And trying to make these kind of the average retail commodity investor a little bit better knowledge, a bit better understanding. Maybe you're new to this space, maybe you want to know what's happening in this thing. These are going to be Uranium kind of weekly, bi-weekly updates, just to let you know of everything that's going on in the market. And this week is no different. So look, we're going to start off with the supply versus demand. This is the uranium structural supply shortage, and you can see there the Western market by millions of pounds of U3O8. So you can see here, there's the demand line going across there. You've got existing production that's currently in the dark green, secondary supply of those being resold on the market, for example, returning mine production of where the price now of uranium is at incentive price. So we are hoping to see the mines come online. But again, it's a massive ask. These mines take 3 to 5 years. Interest rates are not records high, but very, very high in the recent periods. Of course, when you're building a mine that might cost tens of millions, hundreds of millions, the funding on that, the interest rate payments you have to pay is eye-watering alone. So will these mines even get into production? We've not seen a lot of these junior uranium mining companies ever build a mine. Can they do it, or are they just waiting out to try and increase the price to try and sell at an attractive acquisition price? We don't know. You can see here the Western base demand as well. There's the demand line there. So you can see that we're still in deficits from the likes of 2023. That was last year. 2024, 2025. These are what's expecting to come on, returning mines. But you can see even past kind of 2030, the demand goes up and up and up. We're seeing demand come left, right and centre, and supply, there's not really a response. So we're going to dive a little bit more into this. You can see there an average supply deficit of £35 million per year over the next decade. So again, this is from Cameco's earnings report, their presentation. Again, supply is more uncertain than ever. This is the supply outlook of short demand. You can see their structural primary and secondary supply gaps. Again, it's got both primary supply, secondary supply. We burnt through a lot of the secondary supply coming into kind of the 2020s, and again, it's fizzled right down to the bottom. And you can see here, demand base case. That's what they would say, probably the lowest base, what we'd estimate. You've got the high case, and again, all these the green parties and all these kind of emissions targets, the net zero kind of thing, COP28. If we were to hit that, the call to triple global nuclear capacity, we're seeing the UK do that. We saw, I think, at least 20 countries or so sign up to agreeing to triple nuclear. Again, that's the demand curve that potentially is going to be. So even higher than the base case and the high case of what they previously expected. Look at the deficit between that, growing all the way out in terms of these years. It doesn't get better than this. So I keep banging on about geopolitical risk. I know companies are as well. So 40% of Kazakh production. So Kazakhstan is 40% of global uranium production in 2023. A single nation. So think about that. If that was the same of OPEC and the oil countries, that's staggering. A lot of the uranium, the whole world is dependent on Kazakhstan. You can see 80% of that Kazakhstan exports. So not only just the 40% they produce, 80% of that 40% went to China and Russia. Again, you've got the Eastern world versus the Western world. And that's why the US, the Europe are getting so energy secure that they want to clamp down really and be energy security for themselves. Again, on top of that, transportation, insurance issues are accurate, and probably why there's less inventories available for the US delivery. We're seeing the Houthis, we're seeing the Suez Canal, a lot of issues regarding that. Transportation's taking longer, not enough vessels to carry it. How are they going to carry it? We're seeing the coup in Nigeria as well. Is that going to impact it? How are we going to get the uranium out of these cheaper African countries into the US, into Europe? Is Russia going to put their arm around it and just say, thank you very much, this is now our country, not their country, but are they just going to try and take off? I know China have joint ventures with Kazakhstan as well, so that by definition they can take a lot of that. So again, Amir put here, if the trend continues in 2024, the real uranium supply squeeze in the Western world and the near for the North American supplies sorely required. So again, everyone's predicting a massive supply issue on the supply side. Energy security. So this is from the Financial Times. Hot uranium threatens a meltdown for Western energy security. Again, a lot of this is the Western world. It sounds like Russia and China are pretty spot on where they're comfortably sitting with their joint ventures. It's how we're going to get more out of the US. Washington heats up nuclear energy competition with Russia, China. US puts diplomatic clout behind sales of cutting-edge reactors that are yet to show commercial success. They're still behind the curve. These are yet to show, but you can see here there's a lot of funding, a lot of information, a lot of backing going into these companies to try and get the US producing. They're the single-handedly biggest consumer of uranium, but they pretty much don't produce any themselves in the US, and they're very, very small in the grand scheme of things. So looking at the demand drivers, Uranium Energy Fuels, again they're an American company, ticker UUUU, starts production at 3 mines as prices rise and government shows support for nuclear. So as the price is rising, we're getting to the incentive price now for uranium. There was estimates around kind of $75 dollars per pound. It's now way up at around 103 currently. Obviously, with that, you need to factor in that mines are getting more expensive. Can you just fund a mine? Again, the cost of inflation going up. The squeeze on the profit margins are being squeezed left, right and centre. So maybe the incentive price is even higher. We don't know. But either way, you can see the US company also preparing 2 more sites for operation. I know Joe Biden is very specific of trying to get America starting their production. Japan, regulator paves ways for restarts by lifting fuel ban at Karishashi. I can't tell you how to pronounce that. Kashiwazaki. If we've got any Japanese in the description, correct me on that. And again, also there was that bit of a scare with the earthquake in Japan in recent months. Earthquake shows that Japan's beefed up nuclear safety works. Obviously, that was the big issue with the last uranium crash. Well, obviously, a lot of nuclear scare. The only other kind of bear case, the scare that we have, is that the reactor in Ukraine. There was a lot of heavy bombing around it. There's not been that much talk about that, which is a bit scary, but I imagine it's all under control. The safety in these nuclear stations now are not like it used to be back in the Chernobyl times, for example, and you can see that with the earthquake. You can see that it's been beefed up. There's a new one as well, the Guy Martin one on Channel 4 if you're from the UK on YouTube. He actually goes and investigates a nuclear station, the new one, Hinkley Sea Point in the UK, and they've built, even the toilets are bomb proof, like plane proof, this proper thick concrete walls, just in case that the operator gets killed by a bomb or a plane crash or something like that. Everything they've thought of, even the reactor core, if there's a problem, it drops down to a solid concrete base. That's just, it's mind-boggling the amount of money they're spending on Hinkley Point. See, I don't even know if it's going to be that much cheaper than normal energy. They're way over budget, way over time. That's one thing that the UK has kind of failed on. Armenia, another country you don't normally hear of. Country signs contract with Russia on nuclear power plant lifetime extensions. Again, Yevhen's only commercial reactor could operate until 2036. We're extending out that curve of how operational they are. Again, more demand. They need more pounds for longer. Final unit of Baraka nuclear energy plant completed. The UAE, one step closer for full fleet operations. So again, the UAE, I know they're a massive OPEC country. They drive a lot of the world's oil. They're putting a lot of money behind how they're going to have either more sustainable, but just energy security, how they're going to drive nuclear power plants. I think they're going to be a big driver. France bets €1 billion on startups building bus-sized nuclear reactors to fight climate change. These are the SMRs, the small modular reactors. After years of playing defence, the nation's nuclear industry is seizing its startup moment. I know that EDF France is one of the largest kind of uranium power plant producers companies. They're very ahead of the game. France is absolutely brilliant on their nuclear forefront. They're again one of the leaders, but you can see here they're betting on the small modular reactors, bus-sized nuclear reactors to fight climate change. You can see Office of Nuclear Energy gain vouchers awarded to accelerate 7 advanced nuclear technologies. These again, the small modular reactors. You can see here again at the bottom. So GAIN stands for the Gateway of Accelerated Innovation in Nuclear. Announced today that 7 companies will be provided vouchers to accelerate the innovation and application of advanced nuclear technologies. The vouchers provide companies access to extensive nuclear. I've cut off the last little bit at the bottom, but again, massive, great funding, a great tailwind for these companies to come on, get on and produce it. We need this technology out. Rolls-Royce is another company from here in the UK. Many of us know, with explosive gains post-COVID. Again, they're in talks to build mini nukes in Ukraine. I doubt it's actual nukes. They're probably more like power plant stations. They're very heavy on the small modular reactors. They're quite ahead of where they're currently at, but again, it's all this government needs to go through and look at the designs and see if it's appropriate, stuff like that, but they are heavy in the nuclear space. John Quakes as well for the uranium insights. UK makes landmark £300 million investment to become first nation in Europe to produce enriched uranium fuel for advanced SMRs. So again, you don't have to just build these reactors, you need the fuel. They don't just take U3O8, they take enriched uranium. So again, they're putting a whacking great investment in to try and secure the energy. And you can see that as part of plans to displace Russia and help deliver another 24 gigawatts of clean, reliable nuclear power to the UK by 2050. Nuclear vessels. This is another interesting story. I didn't even think it would get to this. Maritime. UK bases Zodiac to explore options for reactor-based vessels. So again, we're seeing this massively in terms of the submarines, of the nuclear fleet. Submarines now uranium on it. They have reactors that mean they can stay underwater for very long periods of time. Vessels, I'm also invested, full transparency, into the kind of the tankers, the shipping, the big the bulk carriers, the container ships. At the moment, the order book is so low for these sort of container ships. They're very, very low because no one really knows. You don't want to go out and buy $1 billion ship if then the governments come to you and say it doesn't meet our regulations. It's too dirty or whatever that might be. So people don't know if it's going to be oil-based, petroleum-based, diesel-based. Is it going to be electric? Is it going to be nuclear? So why spend $1 billion on a ship that it's going to... You're going to wait to see. So the order books are historically very low, and that's why you're seeing tanker rates, container ships, along with the Suez Canal, spike through the roof. Carrying on for the nuclear vessels, UK-Korean partnership to develop nuclear-powered cargo ships. This just following on from a different article. A memorandum of understanding has been signed between Lloyd's Registered, Zodiac Maritime, HD Korea Shipbuilding and Offshore Engineering, and KEPCO Engineering, and construction for development of nuclear-propelled ship designs, including bulk carriers and container ships. Exactly what I was just touching on. These order books are record low. People are waiting to see, is this the future? Is this not the future? And I think once some of these ships are built, once there's government funding and grants behind it, I think these Korean shipbuilders are also going to be a brilliant cash generating machine. They're going to have full order books. And again, the last one then for this episode, John Quakes again for the Uranium Insights. Here you go, exactly what I've been telling you. Near-time producers aren't signing fixed price contracts anymore. The spot uranium price is the new long-term price for majority of supply contracts being signed for future production. Code words, market-related pricing. So Boss Energy, you can see here as well, the Honeymoon Uranium Project in South Australia. Boss secures first binding sales contract, signing market-linked deal with US power utility. Contract of £1 million of U3O8 over 7 years gives Boss financial certainty while enabling it to regain ongoing exposure to the increased uranium prices. A lot of these companies, I know Paladin's strategy is doing this as well, where they wait until the incentive price is going higher and higher. Not incentive price, the actual spot price is going higher and higher and higher and higher. Why sign a long-term contract at the likes of the term market of $50 uranium, or $70 uranium? Why don't you wait until it's the 100, 110, 120, 150, wherever it might go, and sign the contracts then? We're officially in a seller's market. It used to be a buying market where they held the buying power. Now it's the sellers that they get to make the decision. They get to call the shots. They get to set the price. But that's everything from this episode. Make sure you subscribe. It's a brand new channel. I'm bringing out weekly updates on uranium, oil, natural gas, all the sort of thing, commodities. If you're new to commodities, this channel is basically going to try and help you get involved. I know it's very hard for new investors. It looks very scary. You hear it's all volatile. You hear it's all how to invest in it. So it's going to be a bit of an introduction how to do it alongside those of you that already know commodities. Keep you in the loop with weekly updates. I still believe fundamentals are probably the strongest thing. Once you've got your position, you need the fundamentals in place to hold that position, not panic sell, go through the short-term noise and be a long-term investment. So any ideas, let me know in the description. If you're relatively new or you've seen this for the first time and you're not on Trading 212, absolutely brilliant platform. It's now just going live in Australia, so that's UK, Europe, and now Australia. Again, it's absolutely brilliant platform. If you use the link in the description, you can pick up a free share worth up to £100. I get one, full transparency, but you also get one as well, and then you can invite your friends, family, on. So free shares, free money. So yeah, anyway, take care. Thanks for subscribing, and see you soon.